Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. The markets are back open. I just love Mondays, right? And we're having a big up day, up about 500 points on the Dow. Now the NASDAQ up about 130. This is the push upward. I think the push upward has started. I think they're going to push it upward into the end of the year. That's just my take. We still have to get above that 200-day moving average. Now, once we get above that, I think we will move much higher and push up into the end of the year. I think the crash is postponed until next year. I do think a crash is coming, but right now everything looks like it wants to go higher. Now, here's the thing. You see, stock market looks like it wants to go higher, but this bond market, the bond market is just, it's doing terrible. It's the worst bear market we've ever seen in bonds. Bonds are going straight down, right? And these are putting a lot of pressure on the banking system. Banks, now we're having a lot of bank runs. A lot of people don't talk about this on the mainstream media, but there is a lot of bank runs going on. The Federal Reserve, they admit that we've lost $100 billion in deposits have been taken out of the banking system just in the last 3 weeks. But Mike, $100 billion's nothing. There's $17 trillion in the banking system, and soon it's going to get pulled out of there. Now, the bank runs are not just the depositors. Look at Jamie Dimon. He's doing a bank run, right? He owns a lot of JP Morgan stock. He just sold 1 million shares, approximately, $140 a share, $140 million. Now, this is a guy that makes $1 million a week. Does he really need it? He says it's just rearranging his retirement. Well, maybe that's what he's doing, but I think he sees the writing on the wall. He sees the banking system is going to go down, and he wants to get some of that cash out of there. Look at our government has made Jamie Dimon a billionaire. Jamie Dimon runs JP Morgan, selling off 1 million shares. Now, that grant, he has a lot more than that. He's got about, 6 or 7 million shares, but he's selling 1 million of them, and he's pulling 140 million in cash. Now, is Jamie Dimon going to put that money in the bank? I don't think so. What's he going to put it in? Is he going to put it in bonds? Probably not. Maybe he buys some gold and silver. JP Morgan's very, very involved in the gold and silver market. Maybe he'll put it all in Bitcoin. Oh, you moon boys would love that. Get that Bitcoin going straight up. But anyways, Jamie Dimon's doing a bank run. Who else is doing a bank run? What about Warren Buffett? Warren Buffett has liquidated his banks. Why is he liquidating the banks? Because he sees the writing on the wall. Look at, he liquidated his Bank of America shares down 30%. That's not like Warren Buffett. Once he gets in something, he stays in there until the trade works out for him. Well, that trade didn't work out for him. He sees the writing on the wall. There's a lot of bank runs going on. I have a friend that lost over $1 million on Silicon Valley Bank. He was a bondholder. Over $1 million wiped out like that. Now, what the people don't realize is that the bail-ins are not just going to be bondholders this time. The bail-ins are going to also be depositors. The U.S. has never seen bail-ins. We've never seen that in the history of the banking system. But there's going to be bail-ins when the banks go down. And these banks are starting to go down. And there's a big problem with the banks that, well, some people are starting to talk about is the commercial real estate. Commercial real estate loans, these are what the banks have. The banks have the commercial real estate loans. These would be like the big office towers, the big office buildings. These properties are 50% off, and the banks, they're going to take a haircut on these loans they made. They're going to lose millions and millions, billions of dollars. They're going to lose billions and billions of dollars. It's going to be very painful for the banking system. See, the banks, they don't have your money. They've already lost it. They're not good investors. They think they're good investors. They went along bonds. Bonds are this big bear market going on right now. So the banking system is kind of circling the drain. Now, what's really going to hit this market hard is the apartment buildings. People don't get this. You see, the apartments right now, okay, Let me explain this. It's kind of like a death spiral that's going on, and this is going to affect the housing market in such a big way that people don't even understand. It's going to affect the housing market because, first of all, the banking system is going to collapse. It's coming down. The banks are coming down. Okay, now here's why. Okay, so they make all these loans to these apartment buildings. Now, I talked about this on the last episode. 37 floors, 800 unit luxury apartment building in San Francisco was worth 550 back in 2019. That's 550 million. It's for sale right now. It's in foreclosure, 270 million. 50% off, 50% off. Now, why? Why are they selling this luxury building? Well, a couple of reasons. They need to get refinancing. See, these aren't financed for 30 years. No, these are bank loans that go out about 3 to 5 years, and then they have to refinance it. Well, as rates went up, it's much harder to refinance that. Now, as rates go up, what happens to the cost of the apartment building? The apartment building starts coming down. Now, what's also happening across the nation? Rents are starting to go down. Very interesting. Okay, so you got rents going down. You're starting to have some vacancies, but this building went into foreclosure, right? Went into foreclosure. So it's a new buyer. They'll come in $270 million, right? They'll buy the building, and then what will they do? Well, they'll have some vacancies, so they'll be able to afford to lower the rents because they bought it at a lower price, right? They didn't pay 550 million. They paid 270 million. So they'll be able to start to lower the rates. And this will get rid of the vacancy problem they have in the building. See, their vacancies are skyrocketing right now because people cannot afford to pay the rent. Okay, so they're going to lower the price of the rents. Now, what does this do? Well, it's good for the renter, right? So the renter gets lower price of rent. Well, what does that do for the housing market? Well, it takes away the demand. See, that renter that wants to buy the house, well, his cost now is 1/3 of the price that it would cost him to buy the house. So he doesn't want to buy the house right now. The demand for houses go away, and soon you're going to see the houses come down. But what also happens is rents go down. Other buildings, you see, okay, say you're renting in this building where the rent's high. Well, this building just got foreclosed upon, so they can charge a lower rent. Well, all the renters from the high price building move over to the low price, and their vacancies get filled up, and this one gets more vacancies, okay? So they got the vacancies now, so they got to start lowering their rent. Well, what happens? When their loan comes due, they're only bringing in so much amount of money for rents, right? Okay, so they're bringing in less rent. So they go into foreclosure, okay? So their price of their building goes down for basically, well, 3 reasons. Okay, one is vacancies. One is that they have to lower the rates just to keep their regular tenants in there. And the third one is because interest rates, remember we were at 0%. Now we're at 5.25, I believe it is. And now we look at the Fed meets on Wednesday. Very big week this week. We got the Fed meeting Wednesday. We got Apple earnings Thursday. We got the jobs number coming out on Friday. It's a very exciting week. We got a lot of stuff going on. But back to the story of the building. Now, you see, as the Fed raises the rates, which I think they're going to pause this time, no rate increase on Wednesday, but they're going to say they're still going to have one more rate increase. It's just not going to happen on Wednesday. So they're going to raise one more time, which is nothing, right? 5.25, 5.5 doesn't mean anything. They've lost the war against inflation. They're waving the white flag. We can't raise rates any higher because the real estate industry is begging them not to raise the rates. Please, Mr. Powell, please don't raise the rates. Raise the white flag instead and give up the fight against inflation. Let us hyperinflate. That's what the real estate agents want, right? They want their prices going up. They want to be able to sell properties again. But as Jerome raised these rates, the apartment buildings have gone down in value. You see, there's a thing called a cap rate. Now, as interest rates go up, the value of their building goes down. Why? Because they can put their money into other things. They don't need to buy apartment buildings. And you see, so you got rates going up, up, apartment buildings going down, rents going down, vacancies going up because people can't afford the rent, and plus vacancies going up because they're going to the other building, the one that's just been foreclosed upon. So now you got another building that's going to go into foreclosure when they go to refinance. So they're going to go to refinance their loan, but they're going to not be able to get one because the bank's in trouble. They don't have money to make the loan. So they don't have the money to make the loan. And if they do have the money to make the loan's going to be at a very high rate. You see, right now they're paying down around 2 or 3% for their loan. And now they're going to have to pay 8 or 9%. You see, now you're locked in at 2.8%. And 2.8% on a house is a great loan. Well, it's a great loan until you lose your job. You see, what this is going to do as the banks come down, this is a death spiral, right? It's a death spiral. One building goes down, they pull the tenants out of that building into that one, the next building goes down, they pull the tenants out of that one, the next building goes down. It's kind of a domino effect in the foreclosure market of the commercial properties. What does this do? It puts pressure on the housing market. Why? Because rents are dropping now. Rents are not going up. Look, if rents were going up, then it would make sense that these houses are at high prices. In my area, look at a $2 million house, rents for about $5,000. Now, that rent either has to come up to, well, $10,000, or that house has to come down to $1 million. That's where the equilibrium is. And that's just what happens. But as you get the rents going down, you take away the demand for houses, take away the buyers, and the house market starts to go down. But this puts us all into the recession also. Don't forget the recession's coming. So you're locked in at 2.8. Your neighbor's locked in at 2.8. Your job may be secure, but your neighbor's job may go away. So now his job went away, right? So he's got to sell his house. Well, maybe he waits till he gets foreclosed upon. That'd be terrible, right? That'd be terrible because it would be lower than the price Billy Bob got. See, Billy Bob got out up here, but his foreclosure price is going to be down here. Now, you're his next door neighbor. Does that keep your house up here, Billy Bob? No, it lowers your house down here. So now you're down here, you're 30, 40% off. But yeah, of course, in your area, nobody's going to lose a job. In your area, nobody's going to get relocated. In your area, nobody's going to die. In your area, prices only go to the moon. I love your area, but that's not reality. Come back to reality. Come back to my area. Look, we're just starting this death spiral, and it's starting on the commercial property end. It's a death spiral for the banks. The banks have big problems. Everybody's pulling the money out of the banks. Banks don't have any money to make loans, so they're not really doing any business. That's a problem, but they got all these loans coming due. These loans are on the commercial end, right? So their banks are going to take this big hit. Now, of course, there's going to be bail-ins. There's going to be bail-ins. Now, the bail-ins may come from the depositors. It may come from the shareholders. It may come from the bondholders. It may come from the U.S. government, which is really me and you. Our tax dollars will go to bail out the banks again, because that's just what we love to do in America. We love to bail people out. We don't let people fail. No, everybody has to get a trophy. This is America. Nobody can fail. You got to get a trophy. Everybody gets a trophy. We know that. That's the new system, right? We don't let businesses go out of business because, look, we got 20% of the S&P 500 are zombie companies. Now, as the recession hits, as the interest rates continue to go up, these zombie companies, the ones that can't even bring in enough money to pay the interest on their debt, let alone pay their debt off. They're not going to pay their debt off. They're like the U.S. government. There's no way. There's no way they're planning to pay their debt off. There's no way the U.S. government is ever planning to pay its debt off. No, look at the zombie companies are going to go out of business. The U.S. government, there's going to be a reset. Now, how that looks, I'm not exactly sure, but I know it's going to happen. And it's going to happen relatively soon, within the next 3 years, maybe within the next 3 months. I mean, right now it's getting scary out there. 3 months from now could look real scary. I mean, we got Halloween coming up. When is that? I don't know, tomorrow or something, maybe the next day. But look, Halloween's a scary time, but 3 months from now, it's going to be a lot more scary than it is right now. Things are starting to unfold, and it's this death spiral. The death spiral is circling downward, right? The foreclosures in the commercial space are happening like dominoes, and they're putting all the pressure on the banking system. The banking system is in big big trouble. Warren Buffett's getting out. Jamie Dimon's getting out. I'm getting out. You got to take some of your money out. Do not have all your money in the banks. There's bank runs. I don't know. You see, here's the problem. You see, the FDIC admits that their banks are in trouble, but they won't tell you which one. Don't you think you have a right to know? I mean, don't you? It's your bank. Don't you have a right to know if they're in trouble so you can get your money out? But of course, they can't tell you because then everybody get their money out. That bank goes down, and then it's a domino effect in the banking system. People think this is all make-believe. People think I just come on here just to talk, just to scare people. This isn't really real. Well, it is real. It's going on right now. We are in the midst of the biggest financial crisis of my lifetime. It has started. They're trying to cover it up. They're trying to cover up this commercial real estate problem. They're trying to cover up the bank runs that are happening right now. They're trying to cover up that the banking system is in big, big trouble, and they're doing their best not to let me and you know about it. Now, as long as YouTube lets my videos come out here, I can tell you about it, but they may shut me down. You don't know. They don't want this information out there because I scare people. I'm fear porn. Look, this is just common sense. This is just reality. I don't try to scare you. I'm just telling you what common sense is telling me. Look, if I didn't have you guys, and I'm grateful for you guys, I didn't have you guys, I'd probably be in some psychiatrist's office on their couch talking to my shrink, telling them all these problems there are. But instead, I got you, me and you. We can talk about this stuff. We can deal with it because it's real. A lot of people don't like reality right now. It is not pretty. It is not a pretty picture, but it's reality. Anyways, if you like this stuff, I'm Tall Mike. Give me that thumbs up. Why not? Hey, everybody, get out there. Have a great day. This is a big week. You want to punch that subscribe button. We got the Fed Day. We got Apple earnings. We got the jobs report. We got so much more to talk about. Come on back. Give me a thumbs up. Bye-bye now.